Okay, so clearly going into the show, I did a prediction about a week before the show started and how a difference a week can make that really did have an effect on what was happening and what we're seeing happening today. If we're looking at the mood heading in, since in that 1 week that really we led up into it, of course, we had the tragic 787 crash on the Thursday just before. And, almost immediately after there, we saw a step up in the conflict in the Middle East. It certainly had quite a defining point in terms of the way the mood that we saw during the week. Understandably, we clearly saw Air India pulling out from the show and also the senior management team from Boeing too. So we knew there was always going to be a muted view going in. Now, of course, the year to date hasn't been uneventful either. We've certainly seen a lot of protectionist economic policy that coming from the US market, which has had an interesting effect both on the air freight side and the sort of view of where we would expect growth going forward, pricing, inflation, etc. And that's all had quite a strong impact and increasing the uncertainty that we may see for the rest of the year. Other headwinds that have been there for some time, certainly we've seen the effect of elevated operating costs now sort of materializing more, staff shortages that still continue to persist, and businesses that are not necessarily growing at the rate that they were planning to. Certainly different countries have different views as what sort of cost structures that have been going in. Certainly in the UK, we've had changes where unemployment has been increasing, largely due to national insurance increases for employers. Of course, the supply chains continue to remain challenged. We still have OEM quality issues that persist. And since the beginning of the year, we've also had quite a lot of currency volatility, some of it beneficial, but any sort of uncertainty makes it difficult to predict, of course. A weakening dollar does help airline operators, but not necessarily for everyone. We've seen a GDP downgrade for the remainder of the year and also going into next year as well. And we have started to see some of those defaults starting to increase. And then, of course, with the latest Middle Eastern conflict, we have also seen a level of volatility we haven't seen for quite some time. Oil price has been fairly flat now for a while, and it was the uncertainty about the exports of oil through the Straits of Hormuz have certainly had their effect. But of course, we also have tailwinds, and consumer confidence was relatively optimistic in May, certainly from the US data we saw, with an uncertain April and a sort of rebound in May, which does give a little bit of hope towards sort of ticket sales going towards the summer. Certainly the purchasing manager index has been slowly rising, a little bit sub 50, but it is certainly on a slow increase. As I've already mentioned, dollar weaknesses will help airline costs, but we've also seen that the persistence of higher interest rates have certainly had their problems and will lead towards some of those increases in defaults. Whilst I mentioned, of course, the short-term oil price volatility, when we start to see the mentions of ceasefires and things like that, we also start to see them rapidly decrease too. So it is certainly quite volatile. But